Okay, it is 6:05 and I think we are just about ready to get started.
Perfect.
Okay, so Simon, hi.
Hey, Jason, how are you?
You're looking very dapper this evening.
I try sometimes. You're looking good. You're looking sharp.
Very un-COVID of you in your shirt and tie. Okay, so let's get started. I just want to say welcome everyone to Buying for Beginners, Demystifying the Home Buying Process. A lot of the information that we'll discuss tonight is going to be focused on New York City. Everyone should know that the way real estate is transacted in this region is literally different than anywhere else in the world. So we're gonna give you the goods and set you up for success. My name is Jason Christie. I'm a real estate broker with the firm EXR Somerset. I've been in real estate for about 7 years now. My business first started in Harlem and it's still heavily centered there. I have a team. We cover 4 out of the 5 boroughs. We're transacting all over the city right now, everywhere from Brooklyn to the Lower East Side to Harlem, and the Bronx is very, very active. So welcome. Oh, I'm also the founder of Agents of Color. Simon always yells at me for forgetting that.
Yeah, I'm going to make sure it's on there.
That is an affinity group for agents in the area, just where we network, share resources, and support each other. Real estate is very difficult for everyone, and we have some particular challenges that affinity group addresses.
And my name is Simon.Valcin Jr. I'm a licensed real estate salesperson here at Compass. I've been in real estate for 3 years. I too started in Harlem, but I'm also a part of a team that we cover the boroughs here in New York. So we have a varying degree of expertise. So we're going to be here to help guide this conversation and see what we can answer to help demystify this process.
Ooh, let's go. Let's get it.
All right, I just want to give an overview of the goal of what we want to do. So our goal is to make sure that while you're here, you are getting all the answers to the questions that you have so that you can get started with the process of getting into real estate. We're going to cover a lot of resources and a lot of information, and we'll make sure that you're prepared for the next step and see where you are. So please ask questions, ask a ton of questions. We don't want you to leave here and feel like you didn't get your question answered. So feel free to put your question in the chat, and we definitely have people who are going to be screening them so that we can go ahead and answer them during the presentation. We're gonna give you a holistic view of the market, of real estate, and some things that we're going to explain we're expert at it, we do it, we know how it is done. Some of them not. There's a lot of different aspects of real estate, and we wanna make sure that we give you a large breadth of it, but some things may not be in our wheelhouse, and we'll be able to direct you to the person or the team that will be able to do that. We're here to just drill down in our specialty.
Awesome. Oh, I love this. What does a buyer look like? And the answer is you. People always ask us what are the baseline requirements if you want to buy a home, especially here in New York City, where frankly, the barrier to entry is so high, right? Homes are expensive. Every other transaction is a cash buyer. Everyone has $1 million in the bank, and here you come trying to buy a house. Will you be able to compete? This information on this slide shows you what the standard is. And this is per my mortgage person that I use on most of my deals. This was just updated today. Typically, what their bank looks for is obviously income. You want to be gainfully employed, and a FICO score or a credit score of about 640. And they want to see in the bank about 6 months of payday payments. That's the principal on your mortgage, the interest, the taxes, and the insurance. And typically the standard down payment is 20%. Now, if you look at the average sales price of homes in New York City, 20% down, that means you have to have 6 figures in the bank to compete. Well, fear not, we do have some tools and some ways to get around these obstacles that will help you purchase right here in New York City. So we're excited, let's go.
Let's go. So one of the big questions that we asked, why buy? I know Jason wanted to tackle this because it's a very important process to just think about, like, the process of buying.
Well, whether you like it or not, you're already paying somebody's mortgage. It's just not your own. Your rent payments go to pay your landlord's mortgage, and you're basically throwing money out the window, burning your cash. There's no reason to do that. If you don't have to, it's better that you should get in the game and put that money to use in the form of a property. Building generational wealth. This is a topic that's near and dear to me, very passionate about this. Everyone, I think, knows that historically, government policies and banking policies have kept communities of color out of home ownership. And if you look at the wealth gap between Black and brown families and their counterparts today, real estate is a huge key to that puzzle. It's usually the most expensive asset that most people own. And as properties appreciate, the value of your home appreciates over time, you're able to do things with that equity that will help life be easier for future generations. Brings me to the property ladder. We'll discuss this a little bit later in the show, but essentially this boils down to purchasing a home that you can afford today. Maybe it's not a townhouse right out of the gate, but if you get in the game earlier than later, through time, you can buy larger homes, more expensive homes, again, with that equity and appreciation, and create wealth for you and your heirs. Oh, and of course, interest rates. Interest rates right now are lower than they've ever been historically. In the 70s and 80s, it wasn't uncommon for interest rates to be double digits, 20%. And now today, because of the state of the economy, the interest rates are very, very low. The last I checked, the interest on a 40-year mortgage was hovering right around 3.2%. This is important because that is what determines how expensive your monthly payments are going to be, or your monthly carrying costs. The higher the interest rate, the higher your monthly payments. So when you're shopping around for a mortgage, you want to make sure you go with a bank that you trust, that can get you to the closing table, but also shop around for the best rate.
Yeah, I think it definitely goes into the quote, don't wait to buy real estate and wait.
Will Rogers.
Now, we mentioned that there are some different ways of getting into real estate, and these are just some types of real estate investing. So the first one I want to mention is wholesaling and remote wholesaling. So in this strategy, the buyer is going to go into a contract with a seller who is distressed. They are either going through a divorce and a separation, they inherited a home, so their parents passed away, now they have this property that they didn't plan on having, and now they have to do something with it, or they just need cash immediately. So what you would do is you would get into contract with a distressed seller, and then you would shop that contract around to potential cash buyers who are going to say, hey, we want to buy this property. You put a markup at that price, and you contract it to the cash buyer. They're paying the wholesale price for it. The seller gets the cash, and it's a way of someone to get out of the house and you to make money. It's one of the lowest barriers of entry into real estate. And I actually did wholesaling a couple of deals while I was a senior in college in Tampa, Florida. I actually wholesaled 2 houses, one to a couple that was separating, and then one was 3 brothers who inherited their father's home, and I had to contact and be in touch with all 3 brothers. But it allowed me to be able to get into real estate, and that's what really started my love and passion for real estate.
So again, wholesaling is not in my wheelhouse. It's not something that I've ever done, and it isn't the focus of Simon's business either. But we want to give you a broader view of all the avenues that are available to you, because for some folks, maybe getting a 30-year fixed mortgage on a home isn't the way that they're going to enter the market. And when it comes to wholesaling, this is a huge section of real estate transactions nationally. There are people that do this exclusively for a living, and Simon and I are connected to people in different markets, both here in New York and across the country. So if this strategy is appealing to you, again, it's not really in our wheelhouse per se, but we can connect you with resources that can help you tackle that.
Yeah, definitely. So the next one is real estate investment trusts, or REITs. So a REIT is a company that operates, owns, and finances income producing properties. So it's basically a real estate as a stock form. You actually pay money into this trust, and every quarter you're getting a dividend from the real estate investment trust. So you're looking at a real estate investment trust that owns 20, 30, 50, 100 unit properties, and they're income producing. So they're making money off of the rent. You're getting a portion of that as a dividend every quarter. Now, it's definitely something that you want to research and get really good at, and get good information, because it's an investment, but it's definitely a way for you to get into it and really start that in that process.
What I love about these two, Simon, is that with wholesaling, it requires very little to almost no money. And if you want to invest in real estate because you believe in its ability to return on your investment, REITs are great. They perform basically the way a stock does. So if you have a few $100 or a few $1,000 and you don't have six figures in the bank saved up, but you want to have some real estate in your portfolio, this is a great way to check that box.
Yeah, and Jason, you said little to no money or some money. We're talking about multifamily properties. Now you're looking at apartment complexes, 5 units or more, 20-unit apartments. This is a way to accelerate getting into real estate and really getting started in real estate. It's very costly. Surprisingly, though, banks actually lend easier to multifamily properties than to single family homes. They can see the rent roll, they can see the income coming in. So it's a little bit less of a risk for them, but you're gonna need some capital, or you need to find a way to pull some money together, because this is costly.
Yeah, so again, we're not crazy. We're not suggesting that a first-time home buyer in New York City is going to shell out $20, $30 million for a 20-unit building here in the city. That's not realistic. But there are other markets where these properties sell for considerably less money. These are secondary or tertiary markets, and you don't have to be the only investor on that property. You can join in with multiple investors and get a piece of the pie. Again, not our wheelhouse, but we're connected to the resources that can help you.
Yeah, Jason said he's gonna finance our next multifamily property together,
Yes.
putting all the money in, and I'm going to just be there to collect some money, right?
Sure, Simon. Yeah. Whatever you say.
So one of the biggest things you want to do is being prepared. Go ahead, Jason.
No, you go ahead.
Yeah, you want to be prepared for the process. Real estate is not something that you want to go in blind. And this setup is for us to really be able to get you to this point, get you to be prepared. Jason's going to go over some of the things like you want to start off with, and we're going to take you through the entire step. We're going to go step by step to the process, but you want to start now.
Yeah, you know what, guys? We see this every day. Someone comes to my open house for a property that I'm selling, and they're like, oh, I would like some information because I think I'd like to buy this house. And they've never even spoken to a banker. Without speaking to a banker, unless you're going to be an all cash buyer, you have no idea how much house you can afford. And heaven forbid you fall in love with a property that you just know is your dream home. And then you try to do this work on the back end to get prepared. That property is going to be gone and you're going to be feeling heartbreak for a long time. I've experienced that personally and professionally with my clients. So preparation is the name of the game. The very first step is, I think, understanding where your FICO score is. Again, we talked about the standard being a FICO of 640 to 680. This is a website that I personally use and I direct my clients to use as well. It's called myfico.com. It's a monthly fee, like 30 bucks or something. But if you're really getting into the game, I think this is a useful tool. Not only does it have all of your credit accounts in one place, but it gives you your FICO score and it tailors it to specific industries. For example, if you're going to buy a house, the FICO score that the banks will use are very different than the FICO score, let's say an automotive dealership will use if you're going to buy a car. And this website does a really good job of educating you on all of those issues and giving you the resources. And it's really, really user-friendly and very worth the money. How much money do you have to have saved for a down payment? Again, in New York City, typically 20% down is the gold standard. And even if you have that, again, it's very competitive. New York City is a well-known international housing market, and there's a lot of foreign capital or money that comes into this city, and you'll be competing with them. However, we're going to tell you some ways that you can get into a property where you don't have to have the best FICO, and you don't have to have a lot of money in a down payment. But the very, very first step is getting a pre-approval letter from your bank. Again, you'll go into your bank, tell them that you're interested in shopping for a home, and when you are pre-approved, they will review your income, your taxes, all of that, and qualify you for a mortgage. It's a pre-approval, not a pre-qualification. That does.
Well, but Jason, my client has a pre-qualification letter. Isn't it the same thing?
It's not the same, and no one cares. Pre-qualifications are not worth the paper they're printed on, because usually the banks just qualify you on your FICO score, and that really isn't enough. If I see a pre-qualification and an offer, it goes in the bottom of the pile. You want to make sure that you have a pre-approval letter and that you've been thoroughly vetted for that mortgage.
I know you mentioned the different down payments, different processes. I think that leads perfectly into the types of loans that are available.
Let's go.
It's kind of like we actually had this plan this way. Wow. So the NACA loan. A NACA is a nonprofit in a housing and urban development certified homeownership and advocacy organization. So basically what they want to do is they want to assist with economically disadvantaged individuals so that they can become homeowners. They have the ability to have no down payment. There are no points or fees, no closing costs, and you can get a below market interest rate and no credit score required. So that's one of the loans that you can just get in and be like, wow, do I need much?
Guys, this is an amazing product. And I low-key never heard of NACA. I'm embarrassed to say, until probably about 6 weeks ago, when a young couple showed up at a house I'm selling in the North Bronx with a NACA mortgage. And they're paying very little to almost no money down. They're not paying points and fees. And their interest rate is below market. It's 2%. So this young couple is about to buy a $840,000 three-family home, and the only cash that they're laying up is like $12,000, and they're going to get that back at the end at the closing table anyway. This is an amazing, amazing product. You do have to sign up with NACA online, and you do have to take some financial literacy courses, but it's extraordinary. And I had no idea that this even existed until a couple of months ago.
Similarly to the NACA loan, we have FHA. So FHA are the loans that most people know about, 3.5% down. So these loans FHA loans have been helping homeowners since 1934, because the Federal Housing Administration, which is part again of Housing and Urban Development, insures the loan. So the lender can offer you a better deal. You're going to get low down payment, low closing costs, easy credit qualifying. Again, 3.5% down is normal for an FHA loan, and it's available on 1 to 4 unit properties. I know that's one thing that Jason loves about this loan.
Yeah, that's my favorite play, but we'll get more into that later. And guys, don't be worried about taking notes if this is a lot of text for you. We can make sure that you get the slides to this deck after tonight's presentation.
All right, and then the next one is a VA loan. So VA is the Veterans Affairs. They actually help service members, veterans, and surviving spouses become homeowners. So their mission is, as a service member who goes and serves in a branch of the military, they want to be able to make sure they can come back and be homeowners. So as part of their mission, they actually provide a home loan guarantee and to help you buy, build, repair, or retain a home for your personal needs. Again, low down payments, because the VA is guaranteeing a portion of the loan. Banks like looking at it because it's something that if you can get a guaranteed portion of a loan, the bank's like, great. And you get easy credit qualifying. It's just another way for the government to help service members. And then the one loan that encompasses everything is a conventional loan. Conventional loan are the ones that are not guaranteed by the government. They're not insured. You can get low down payments, but this is probably best for buyers who do have the large down payments. These are the 10, 20% buyers. They have stricter credit qualifying that you need to make, and your debt to income has to be less than 50%. But if you get this loan and you're competing against someone who has a NACA or an FHA loan, it's different because they don't have to go through the hoops of the government backing it. And these are the ones that you normally see on homes in New York.
Yeah, a little caveat there. Neither Simon nor I are mortgage brokers or bankers. So you want to have this conversation with a specialist to make sure you understand these products for what they're worth. Okay, and again, we can connect you with those folks.
Lead into it, Jason.
Oh, I love this one. Where's the next portion? Yeah. If you're a first-time home buyer, it's very, especially here in New York City, it can be such an intimidating process that I really like to remind you that you're the one that's generating the work and the income for everyone that's going to be associated with your purchase. We all work for you. You're the boss. We have a fiduciary or financial responsibility to you, and we're all going to be operating with your best interest in mind. So never be afraid to advocate for yourself and to ask questions, even if it's your lawyer or your CPA or your broker. Remember, you're the boss. We all work for you. The first person on your team, in my opinion, should be a real estate agent that has a ton of experience and has a connection to these other professionals that will be the other part of your team. Also, you should know that if you're a buyer, you do not pay the commission for your real estate agent. That commission is baked into the price, and at the closing table, it's the sellers that write the commission check. So there really is no reason for you to be unrepresented or to be afraid of working with a broker. We have all of the relationships, we know the process inside and out, and it's not something that you want to do alone, especially if it's your first time. Same thing with your lawyer and your CPA. Why do you need to have a CPA if you're buying a house? Well, maybe you shouldn't be buying the house in your name. Maybe you should be buying that house in an LLC. Your lawyer and CPA will help you figure that out for yourself and get you to the closing table. With the lawyer especially, it's very important, hear me as I say this, it's very important that your lawyer be New York City attorney that is familiar with New York City real estate transactions. Again, transactions here are different than anywhere else in the state. And, a lot of people make the rookie mistake of hiring their cousin who is a divorce attorney or, their mother-in-law who's a real estate attorney, upstate. And it always leads to problems. They're not going to be familiar with the standard contract language. And I have experienced this time and time again, where the two attorneys wind up fighting because the out of city attorney, frankly, has no idea what they're doing. the seller loses faith in your ability to close and they say bye-bye and they go with the next person in line. So you really want to make sure that your attorney is local and experienced. I can't stress that enough.
Yeah, and I think that also goes with the mortgage banker. You want to have someone who knows the ins and outs of New York real estate because New York has co-ops that are unique to New York City. And I've seen some people actually had a deal where I was selling a HDFC co-op in Harlem. We'll get to the specifics in a little bit. But I was selling the condo and a co-op, and the buyer came in with a pre-approval from, um, let's say, Quicken Loans.
Oh God.
Not a knock to the Quicken Loans, but if they aren't prepared for what it means to lend in New York, they won't know what a co-op is.
Yeah, don't do it.
They looked at it, and I asked, one question I always ask is the building a part of the bank's information? Like, is it in their system? When I hear what does that mean? I know that bank is not going to be able to do it. Long story short, they weren't able to use that bank. Luckily, I was able to connect them with a local banker in the neighborhood who was able to get them closed, but it was a little shaky at first. And I wanted to make sure that they didn't even go that route before we get there. So you definitely want to choose local.
Local, local, local. What's next, Simon? Oh, look at that. I love it. This is a good time, I think, to pause and answer any questions that you guys might have. There are folks that are reading your questions in the chat. And if we have any, we'll answer them if they're related to the material that we've covered so far.
Hey, yeah. Yep, I got the questions. Hi, thank you so much for joining, folks. This is an incredible show. I'm Jodie. I'm the head of diversity for Compass, and I will be feeding your questions from the chat to Jason and Simon. So the first question we have is, how did you prospect for wholesaling?
Simon?
Okay. So I did it in Tampa, Florida. So the way I did it was have you ever seen on the side of the road, the We Buy Houses signs? I actually made those We Buy Houses signs for cash. And the way I did it was I drove around South Tampa, which is a neighborhood that had a lot of homes that were higher priced, but older generation. And I used to put the signs right next to yard sale signs. So Friday night, around midnight, I would get in my car and I would put the signs right next to the yard sale signs because the people that I'm looking to attract are the people who are going to wake up on Saturday morning and go to yard sales because they're older and that's what they do. And that's actually how I got my deal in South Tampa. Was someone called me and say, "Hey, I saw your sign on the side of the road. Can you come and see my place?"
Wow.
And that was just an interesting thing. There's that yellow letters. So sending out letters to neighborhoods that say that I will buy your house for cash. The way the contract is written, I'm going to be marketing that contract out to cash buyers who I already had in a Rolodex. And they told me what they were looking for. So if it fit their criteria, it was a easy thing. But yeah, that's what I did. And I know my wife was not happy at that time when I was like getting up at midnight, 1 o'clock and driving around to put signs up, but it definitely helped.
But Simon, you said something really important there. If wholesaling is the way you're going to go, you have to have a pool of buyers who understand the process and are ready with that cash. Yep. So that's something that we can talk about more offline, but that's an important point.
Definitely.
Awesome. Second question, if wholesaling, does that impact your ability to later get an FHA or no, since you're kind of a middleman?
So wholesaling is literally being the middleman. You're going to meet a seller who's looking to get out of their home, and they're going to contract you at 50 to 60% of the actual retail value because their goal is to get out of the property. You're going to market it to a cash buyer because they're not looking for property that are on the market. And what a cash buyer normally does is they buy it at wholesale, they put some money in, they fix it up, and then they sell it. If you are the buyer that comes into that renovated home, you can get an FHA loan, you can get a conventional loan because it's going to be on the market and available. But in terms of actually buying it as a wholesaler, unless you're putting the cash up, you want to be the middleman. And again, it's the lowest barrier of entry into real estate. So you don't have to, there's no transaction of money coming out of your pocket.
And Simon, if I understand you correctly, if you're the wholesaler that's doing this work, you're not actually closing title for the property under your name. So it's not like you'd be disqualified from a first-time homeowners program.
Exactly. It is not going into your name. It's literally going from seller assignment contract that says you're assigning this contract to Y, and the Y is a cash buyer. So you're not personally putting money into it, and you're going to still qualify for those first-time home buyer credits when you're ready to buy.
Got it. Awesome.
All right, I have a salacious question. Are sites like Credit Karma reliable for FICO scores?
Are sites like Credit Karma
reliable for FICO scores?
Simon, do you want to take that? I'm happy to chime in.
Yeah, you know what? I'm gonna let you go take that one.
Yeah, so I've never used Credit Karma. I've seen the ads like everyone. So the thing that you want to be sure of is that if you're paying for a service, that they're offering you that FICO score. And also some of these services, they'll only offer them to you periodically. One of the things I like about myfico.com is you can check that thing in real time anytime you want. So I'm not too familiar with Credit Karma, but if you want to go that route, just make sure you're getting your actual FICO and that you'll have access to it whenever you want.
In terms of Credit Karma, so Credit Karma is a soft inquiry, so it's not actually pulling your credit. What people don't realize is that credit score that you see may not actually be your credit score when you actually get it pulled. And as Jason said earlier, it depends on what the reason for the pull is. If you're pulling to get a credit card, they're looking for different things. If you're looking to pull a house, it's a completely different thing. So what they're looking for in terms of your credit and credit time, history, length, and the amount of credit open is good to know, but it depends on what you're using it for. And places like Credit, I use Credit Karma, I can see my score, but I know that as soon as it actually gets pulled, it's different.
All right. If you're a couple with good credit scores, but only one income, will that work? How will that work, et cetera?
Yeah, it will work. And just know that the banks will always go with the lowest FICO score. So if one member of the couple's FICO is lower than the other, you'll be approved based on the lower score.
We have quite a few questions, so I'll try and run through these as quickly as possible. With our current market environment, are current homes overvalued? And do you believe that it will continue to increase with our low interest environment?
Yeah, so first of all, New York City is not one market. There are multiple markets in New York City, and there are multiple submarkets within those markets. So when we talk about market conditions, you want to really understand that going in. So the question is, are current home prices overvalued? It depends on where you're looking and what you're looking at. If you're looking at a new development condominium in a developed neighborhood that has developed housing stock like Upper West Side, Tribeca, or anywhere downtown, yeah, I think prices can be high. And also, even in a market like this, that's obviously a down market and very much a buyer's market, you still have some sellers who are very unrealistic about the values of their homes. This is something that we see in every market. It's an emotional thing, and it's just something that you have to deal with. But by and large, what we're seeing today is that there are deep discounts available in multiple markets and in multiple product types. Currently, I have an accepted offer on a co-op in Sutton Place. The listing price was $1.5 million, and a very close comparative apartment sold in the same building this year during COVID for that price. We got an accepted offer at $250,000 less than that listing price. So it's another reason, in my opinion, to get into the market today, because if you're willing to be aggressive, maybe you'll find a seller that is also willing to come down in their price.
$250,000 discount, man.
Yeah, I know, it's huge. I mean, I gagged.
Okay, there's quite a few NACA loan questions, so I will go through all of them, but there's quite a few. First one, don't NACA loans require you to live in the property for the life of the loan?
Yeah, so again, I am not a mortgage broker, and I think I admitted at the very beginning of this presentation that my first experience with NACA was just in the last 2 months. I don't know if you have to live in the house for the life of the loan, but I do know that when you sign up with NACA, that website that Simon shared, they explain all of this to you in the course that you're required to take.
Perfect. Major cons for NACA.
Customer service. The customer service is not great. It's very bureaucratic. There's a lot of bureaucracy and red tape. And also, NACA will not close on a home if there are any open violations. So for example, that house I told you about in the North Bronx, that young couple is using a NACA mortgage, the violation was fixed by the current owner, but because it's technically still open because that certificate hasn't been approved, we're not able to close on the property. If this were another type of buyer with a different mortgage instrument, we wouldn't have that delay or that issue.
Perfect. Qualifiers for NACA. I think you shared this, but if you could repeat.
Simon, I'm talking too much. Do you want to say something?
So NACA, you have to, there's going to be programs like home buying programs and seminars that you have to attend so that you are well aware of the process and show that you are committed to buying. But again, there's no down payments, no closing costs, no points or fees, and there's no credit requirement that you need.
You have to have money coming in. Yeah.
Yeah, you just like any loan, you have to make sure that you show some income coming in, but they're going to be one of the ones that have those lower requirements that you need. You just have to make sure that you go to the events that they tell you to go for home buying so that you can be prepared for it, so they know and they can see that you're committed to doing the process.
All right. Are seniors or retirees eligible for NACA?
Yes, everyone's eligible as long as you have income.
Okay, final NACA question. Can I use NACA for purchasing a co-op?
Yeah, you can use it for purchasing any property type. Again, the level of competition is different across property types. Typically, actually, co-ops in New York City, they have really strict requirements for their buyers. So they want to see something in what's called a post-purchase liquidity. So not only do they want to see that you have all of that money saved up, usually 6 to 9 months of your maintenance fees and your pity payments, but they want to make sure that you're not using your last dollar when you purchase that home. And frankly speaking, if you're going through the NACA program, you're probably not going to have those assets, and you probably won't be able to compete with that pool. Simon, would you agree?
Yeah, I would say that co-ops are very specific types of housing in New York, and their requirements vary by building. They really want to see like that post closing liquidity, and if they don't, they have other requirements like a minimum down payment on the building. So NACA has no minimum down payment that you need, but the building might be 10%, which means you need to have 10% of the closing costs for the building, and that's the building specific requirement. When in doubt, the building specific requirement is the one that's going to win out. So if let's say you get an FHA loan for 3.5%, but the building is requiring 10%, you have to go with the 10% because that's what the building is requiring.
Right, exactly.
All
But
right.
there are some options.
NACA.com, folks. Please check out the website, register for the courses, all the information that you need there.
Definitely.
All right, I'm going to ask a few more questions because I do think some of these will be answered through the remainder of the presentation, and then we can do final Q&A at the end.
Yeah.
But a really great question. If property appreciation is a priority goal in your home purchase, what's the best way to find New York City neighborhoods that may be an outsized opportunity in the future? What stats should you be tracking, et cetera?
I like this one.
Yeah, this is actually perfect how you led into this, Jodie, because this is actually within the conversation that we're going to have. You want to find neighborhoods that are growing markets. So there are some neighborhoods that are already developed and mature. Like Jason said, Upper West Side, Upper East Side, Tribeca, those places have determined factors, like they're already there. The prices are going to be higher. People who are going to be there are going to command more money for sell their homes. But there are neighborhoods that if you start looking into, Harlem, tons of places in the Bronx that Jason specializes in, Brooklyn, South Brooklyn, just there are neighborhoods where the appreciation is happening and still happening. In New York, New York has a track record of appreciation. So you're going to always see some kind of appreciation. I'm not guaranteeing that. I want to put that out there. I'm not guaranteeing it, but there's a track record of it.
I would say, I hope I'm not going to get in trouble for saying this, but I would say follow the gentrifiers because they're the ones that are always following the value. If you remember back in the day, no one wanted to live above 86th Street because it was too shady. Then it was 96th. Then no one wanted to live above 110th. Then it was like Harlem, but only South Harlem. And now it's even going to the South Bronx. The short answer to this is really work with a professional broker. We live and breathe this stuff every day, and we know what neighborhoods have the most value, and we know what neighborhoods are poised for the greatest returns in the near future. It's just another reason you want to work with an expert.
Yeah, Jason actually has a true story about that.
Case in point, I have a house on the for sale in Mott Haven, the South Bronx. There's literally no roof on the house, okay? There's nothing inside. It's been stripped to the studs, but the property is on the market for $1.3 million. So,
in the Bronx?
Yeah, in the South Bronx. So that market is rapidly maturing, if not too late. If you really want to get the biggest bang for your buck, you really need to work with a broker that's able to guide you to the next market, the next one that's going to pop like that.
Do you have any insight? Can you share with the attendees any insight into the next potential markets?
Yes. So the Bronx is my favorite. We're very, very active there. So Longwood, again, these are neighborhoods that are further outside of the city in the North Bronx, but Pelham Parkway, where I live, homes here are undervalued and gorgeous, surrounded by parks. Morris Park, Kingsbridge Heights, those are all Bronx neighborhoods. In Brooklyn, I would say East New York, East Flatbush. What would you say, Simon? East Harlem?
East Harlem, I was going to go, if you're looking at East Harlem, North Central Harlem, Inwood, someplace in Washington Heights. I actually had a couple who moved into Inwood. Their whole thing was, we want to be by Central Park. We want to be by a park. We want to be by Central Park. And they only looked at that neighborhood. And I told them, I said, hey, I know you really want to be by a park. Let me take you up to Inwood, where Inwood Park is the second largest park in New York City. And they found an amazing property, 2 bedrooms, right outside. Like you walk outside, the park's right there, and they got it for a low price. Where right now, they turn around and try to sell it, they're probably 35 to 40% up on their appreciation, and that was 2 years ago.
Amazing.
So there are neighborhoods, if you look at it, and like Jason said, if you follow the trends, you see where people are moving to. People are moving further north in Harlem, in Upper Manhattan, into the Bronx, and further south in Brooklyn. So if you get to those neighborhoods beforehand, and you can stake the claim there, and you own a piece of the rock, it changes because that appreciation is going to get there. It's just about when you time in and you get into it.
The one thing I'll say before we move on this point is check your mindset at the door, because a lot of these neighborhoods where there's still value, they're not going to be the prettiest blocks, the prettiest neighborhoods. 15 years ago, 20 years ago, no one wanted to live on Frederick Douglass Boulevard between 110 and 123rd. And today, none of us can afford it. So you have to be willing to put some skin in the game and wait, frankly.
That is a fact.
Amazing. All right, so why don't we take a pause on the questions here, and then for everyone whose question I didn't answer, I have a tracker of them. I'll ask them at the end, but I do think some of these questions will be answered in the content. So Jason and Simon, take it away.
All right.
Let's go.
And I know that we were saying a lot of different things. We're saying co-ops, condos, townhouses. It actually gets us into like what you should you buy? What are the different types? And one of the things that we mention are condos. Condos are the quintessential idea that people think when they think of owning property. With a condo, you actually own the physical space. When you buy an apartment in a building, the four walls, the ground, everything that's in there is your property. It's very investor friendly. So New York being a very transient city, you can, if let's say you want to stay here for 2 years and then your job relocates you, which happens, New York is a great place to have a career, but they move you to someplace else. You can actually rent the apartment out and still keep the ownership. You don't need to interview to purchase, which is different than co-ops. The difference between the two is it's typically more expensive because you're owning real property. It's more expensive and there's less available inventory. So New York is 25% condos. That number is obviously being changed with more condos being built, but less inventory and less available inventory leads you to higher prices. Co-ops, on the other hand, have a low cost of entry. So these are the types of products where there's a lot of them. There's 75% of New York is co-ops. You have a lower cost of entry to get in, and there's indirect ownership. So you actually own a stock and lease. So you own a proprietary lease and shares in a corporation. Because you're owning shares in a corporation, one of the disadvantages is that you have to be interviewed by the board. Now, in New York, there's a rule that if you get rejected by the board, they do not have to give you a reason. Like, you could be the perfect client. I actually had a client who went through the entire process in the co-op, went to the board, and they thought that they did amazing. They thought everything was good. And normally when I talk to my clients, I coach them up ready to go, what to say, what not to say, how to be presentable in these interviews. And next day they said they were declined. And I asked why. Like, well, we don't have to tell you. So it's a little bit different when you could fall in love with a place and then you don't get accepted by the board. It's one of the disadvantages. You can't really rent it out if it's not really investor friendly. But it definitely is a way to get started on the property ladder, because you may be able to find that perfect one, get into it, hold it for a few years, and then start trading up. So we're not saying no to co-ops, never. You just want to find the right one in the right place. Do you have any comments on that, Jason?
The big takeaway is that condominiums are more expensive, but they offer more flexibility, and they are real property, like Simon said. Co-ops are less expensive, and they offer less flexibility, and they're not real property. You own shares in a corporation, which can be a pain in the butt, frankly.
We're going to talk about Jason's favorite type of property, or townhouses. And we're talking about like the Brooklyn brownstones, the Harlem townhouses, the Bronx townhouses that Jason has right now. That's $1.2 million and empty. So these give you space. It's a multi-floor building. You own an actual house. There's no paperwork needed, no approval needed from somebody else. The only approval you'll need is if you get a mortgage on it, and that's the approval that you need, and to agree on the price. Disadvantage though, it is the costliest investment. There are family townhouses and townhouses in the city that can start at $1, $2, $3 million. I had a listing last year for a $3 million townhouse in Brooklyn. All the maintenance cost falls on you. If you need to replace a roof, the boiler, you have any damages, if there is snow in front of the building, you know who's shoveling that? You. Jason, you have any comments on?
No, I think you nailed it. I would just say that I think townhouse owners are typically a different breed. They love the idea of owning their own home, obviously, and they're willing to have the trade-offs of this extra work and extra liability for not having neighbors on top of them or, all that jazz.
One of the things that I mentioned earlier is HDFC. So HDFC stands for Housing Development Fund Corporation. So these are typically the lowest cost of entry because they have income restrictions that allow New York to remain affordable. We know New York is a very costly city. And if everything was at the same price and the same availability, there are some people who actually get priced out of living in New York. Income HDFC co-ops that allow people that you can't make more than a certain amount to still be able to purchase real estate.
Yeah.
Disadvantage, and it's a big disadvantage, is some people actually take advantage of that. If you have a low income, but you have tons of money in the bank, or family's going to give it to you, or you're going to have an inheritance, you can actually go and just buy these places and start buying it up and living there. And some income restrictions are stricter than others. I've seen some that have a $45,000 to $50,000 income restriction for a place that costs $600,000.
Yeah. HDFC co-ops are the least expensive. They're super, super competitive. And because their prices are so low, sometimes as low as, $175,000 or $200,000 for a 1 or 2 bedroom apartment, the sellers are asking all cash, and they get it, frankly. So it's very, 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 very competitive, but with patience and preparation, possible.
Yeah, and working with someone who knows this specific type of property definitely helps.
Yes, sir.
I know we mentioned this, and Jodie came up with some great questions, just like where to buy. And some of the things that you want to focus on is whether you're going to be an end user or you're going to be an investor. An end user is someone who's going to live in the property. They're looking at it in terms of, I want to live here. I want to make this my own. I can see raising a family here. I'm going to live here 5, 7, 10 years. So you're looking at it in the sense of, because I'm going to live here, I want specific things to happen. Versus an investor is looking at it in terms of a purely monetary value. What can I buy for it? And what can I rent it out for, and how I can use it? So you're looking at it in 2 different lenses.
Yeah.
You want to know which way you're going to be looking, because depending on which way you're looking, it's going to matter.
I'll say one thing about this that's incredibly frustrating when I'm working with investors who know they're not going to live in the house, and they're like, well, I don't like this color on the wall, or I don't like these finishes, or I don't like the fact that there's not enough trees on the block. Remember, it's an investment. You're not going to live there. Your tenants aren't going to care. So again, adjust your mindset and focus on the opportunity.
Definitely. And one thing that we also did mention as well is, the market are you looking at New York City, the 5 boroughs, because that's one market, and there's a lot of sub markets within that market. And there's also secondary and tertiary markets. So you're looking at Philadelphia,
Newark,
Columbus, Newark,
Jersey City,
Connecticut.
Yeah. So these markets, these markets have lower home prices. The barrier to entry is obviously lower, and especially if they're easy commutes to New York City, where you can keep an eye on your investment more easily, that might be a better option for you. Again, we can connect you with experts in these regions that will take care of you. Oh, and then the mature versus growing markets. We talked about this a little bit earlier, but the growing markets are the markets that are usually adjacent to more expensive markets, but homes there are undervalued.
It's 7 o'clock.
Thank you, Siri. Or lower in value It's a trade-off. Typically, because the neighborhood is not as developed, there may be fewer services, but that's why the home prices are lower. An example would be the Upper West Side, where townhouses are $5-6 million. That's obviously very mature, whereas a townhouse where I live in Pelham Parkway might be $700,000. So there's still a little bit of value there.
It's just an overview like we spoke about before, differences between condos and co-ops, just how different they are.
Again, we just make sure that anyone who wants this information can get it after the presentation. So no need to worry if you missed something there.
Yeah, don't need to screenshot the screen. Like, I missed that. You want me to go back? Don't worry, we're gonna send this out so you guys can have it. So one of the big questions that people have is, when should you buy? Now. Now's the best time to buy, because of, one, the historically low interest rates. Interest rates determine how much you're going to be paying on your mortgage payment. And if you calculate what your mortgage payment is, it might actually be less than the rent that you're paying right now. I've actually seen people who bought, and instead of changing from renting, and they saved money. I know when I graduated from South Florida, Bulls, I actually bought a house when I graduated because I didn't want to rent. And my mortgage payment at the time was less than I knew some people who were paying in rent. And that's what you can find. You can find some places like that. Time value of money. If you buy now, you hold it 5, 7, 10 years or longer, you're going to pay less. What you're buying now and it appreciates is going to be more, and you really want to take advantage of that now.
That one bedroom apartment that's $500,000 today, you wait 5 years when you feel like you're ready, it might be closer to 800 or 900, and the interest rates are going to be a lot higher, and you can't afford that apartment anymore. Better you should get in now where you can afford to, and then take advantage of that appreciation and trade up when the time is right. Oh, it's obviously a buyer's market right now. There's no secret there. We're still heavily in the midst of a global pandemic. So in addition to interest rates being really low, there are bargains to be had. Again, if you're prepared and patient, you can find them. In a buyer's market, buyers can request things of sellers that they typically might not be able to request previously. For example, if you're buying a new home, like a new condominium, there are taxes and fees that are typically paid by the buyer, but in a down market like this, the seller can be made to pay those fees instead.
Yeah, and one of the things that Jason said early on, I just want to reiterate, it depends on the market, and it depends on the neighborhood, it depends on the price point. I know it's a very lawyer answer, it depends, but it definitely does depend, because there are some markets that are still sellers markets, but a majority of the market is a buyer's market. I want to throw that out. It's an emotional process for both sides.
Yeah, can I just say something about that really quickly? Real estate is very emotional, and it's another reason why you want to work with a professional. Believe me, people can get super crazy really fast. We could tell you horror stories that you wouldn't believe. It's so much better to have a buffer in between you and the seller, a professional, hopefully with high emotional intelligence, that's going to be able to manage the emotions of all of the stakeholders. Maybe the sellers are grisly, maybe the lawyers are not so polite, and the buyer themselves. So yeah, that's really, really important. The property ladder to wealth. This first slide is actually a true story. I helped a woman, she was a single mom, a correctional officer here in New York City, and she bought an HDFC co-op. She was lucky enough to get in, and she bought it for about $200,000. She held on to it for a period of time. This was in Harlem. the neighborhood grew and property values increased rapidly. And she was able to sell that co-op for just under $800,000. And what she wound up doing was taking the proceeds of that sale, and she built a home for her and her son upstate. And I can tell you, I mean, she cried, like she couldn't be more thrilled. I still get pictures of him shooting hoops in the driveway, you know, hanging out with the dog in the backyard. And she herself never would have been able to imagine that future for herself before this. So this middle slide is also very typical. Maybe you get into the market in a one-bedroom co-op and you hold it for a period of years. In New York City, the typical length of home ownership is about 7 years. If you're buying wisely, that property will appreciate over time. So now you can trade up. Maybe if you were the woman that I mentioned in the first story, instead of building a house upstate, maybe now you can take that equity and buy a condominium, a 1 or 2 bedroom, hold on to that for a period of years. And now you can start using the equity in your home to do things that will really generate wealth for you and your family. Purchase other investment properties, buy stocks, fund college educations, et cetera, et cetera. This third play is actually my favorite. I think the smartest thing to do is house hacking. And that means your first purchase is going to be a multifamily home, a 3 or 4 unit property where you live in one of the units and you rent out the others. And if you're buying this wisely, the rent roll from your tenants are now paying for your mortgage, paying for your taxes. They're going towards an account that will pay for any repairs. And maybe you're even living free in that property. I see it all the time. While that property is appreciating over time in value. So you're not paying very much to live in the space, and in a few years, you're going to have equity.
So you're telling me that you could buy a 3-family home, live in one, rent out, and may even pocket some money from the rental.
Absolutely, it happens all the time.
That's the true house hack right there. So the question is always, how do we do this? What is the process? What's the steps from start to finish? And I'm going to go through this relatively quickly, but again, we're going to give you this information. So I want to make sure that you know that you don't have to like screenshot it. We're going to give this to you. So you want to find an agent. You want to get pre-qualified. You want to talk about your different options. Then you want to visit properties. You want to go to open houses, attend viewings. Once you zero in on a place, then it's time.
Can I interrupt you there? Number 2 and 3, folks, please don't get it twisted. Don't go shopping for homes until you get pre-qualified. It makes no sense. You have no idea how much house you can afford, and you're not making the best use of your time to do that. Find an agent, build your team, get qualified, and then go shopping. Sorry, had to say that.
No problem. And we mean as in getting the pre-approval, not the pre-qualification. I know it's right there. So after you visit the property, find one that you like, you get your team to work now. Now the agent that you've selected is going to negotiate on your behalf and get you the best price that is agreed upon.
Oh, I have to talk about this one too.
Oh, go ahead.
Again, don't get it twisted. Just because it's COVID and you think you're entitled to a discount because it's a buyer's market, don't get crazy. Rely on the advice of your professional. That's why they're there. The win is getting the house. The win is getting the house.
Okay? One more time for the people in the back.
The win is getting the house. Professional trauma. Go ahead.
Yeah. So at this point, that's when you get your attorney to review the contract while the mortgage banker is getting the mortgage lined up for you. So after the review, the attorney is negotiating it. Then you sign the contract and you put down your deposit. Whatever is the group, what you put, do the loan application with the bank.
Yeah.
Then you prepare.
I'm going to interrupt you. I'm sorry. I'm like interrupt us Rex here today. But nothing is final until both parties sign the contract. Anything can happen, especially in New York City. You think because you negotiated a great deal, the lawyer sent your lawyers a contract, you signed the contract, it's a done deal. But you know what? Someone comes in behind you, they make a higher offer, and now you lost the home and you didn't even know about it. It's another reason to work with a professional. We know most of the agents in the market. It's surprisingly a very small community. We have the relationships, we know what questions to ask, and we're going to make sure that doesn't happen to you. There's no sense in going at this alone.
Definitely. One of the things that comes with condos and co-ops are board packages. An application, board package, whatever it's called, it needs to be done, and you want an agent who knows how to do the process, because some co-ops are really strict. They want everything filled out plus 7 copies. And I've done it with a 800-page application board package, and then had to make 7 copies of that for them to just be like, okay, well, we'll interview them regardless. You want to make sure you get that done and be ready for it, because the board, number 9, the board approves the purchase. And that's in both instances. I know we said that the co-op needs an interview, but the condo board still has to waive the right of first refusal, which means that they're not going to buy the place, which allows you to buy it. So someone's going to do the approval for both instances.
Yep.
Once that's done, now we're setting the closing dates. Now the bank is saying, okay, you're cleared to close. We've done all of our due diligence. You're good to go. We're going to give you the money. The closing is scheduled by the attorneys. You do the walkthrough, do the final walkthrough with your agent. And let me tell you, you do the final walkthrough with your agent, because the last thing you want is to walk into an apartment that you didn't do the walkthrough for, and there's no stove, there's no fridge, and there's no toilet.
Simon, this sounds like this happened to you before. I'm sensing some trauma.
I've seen it. So the buyer didn't want to go. They wanted to do the final walkthrough a week in advance while the seller still lived there, and they didn't do the day of. And you walk in, outlets didn't work, fridge didn't work, stove didn't work. Now it may not sound like a big deal, but if a stove doesn't work, when you saw it worked, and when you closing it didn't work, someone has to pay for it. And I know one of the big things that Jason advocates is having an attorney who litigates. I knew where you were going with this, Jason.
It's like you're reading my mind, brother. Yeah, so what that means is, God forbid there are any problems at the closing table, something is not what you agreed. Having an attorney that can frankly fight for you at that closing table is really, really, really important. I had to deal with a young couple, pregnant wife and everything, who was buying a townhouse in Kingsbridge in the Bronx. When we got to the closing table, many of the conditions that we had agreed would be completed by closing were not. The broker played dumb, the sellers played dumb, and the seller's attorney was very experienced and took the gloves off, and they were just going at my client, the buyers, their attorney. The attorney that they chose to work with did not know how to litigate, and I literally had to kick him under the table. And when that didn't work, I wound up litigating myself because someone had to stick up for them. That should not happen. I am not a lawyer. You want to make sure that your lawyer, in addition to being local and is familiar with the process, has the chops to fight for you at that closing table if they need to. And fight for you in a way that's not going to kill the deal, but it's going to, in a way that will make sure the conditions that you agreed upon will be respected.
Yes. And that's why, as agents, we advise you on the team that you have.
Yeah.
Back to the team that we put together.
Don't skimp on your lawyers, folks. You get what you pay for.
Yep. Closing, congratulations. You now own the home.
Cool. So, I mean, I touched on this in a couple of slides ago, but the win here really is getting the house. If you own a home in New York City, whatever type of home it is, it really is an extraordinary privilege. It's one of the greatest cities in the world. Many people believe that, and many people want to live here. You're never going to be short of buyers in any market. And again, if you buy well, your home is going to appreciate over time and really set you up to create that generational wealth for your family, and that will help in the future.
Yeah, and you want to make sure that you're set up for that, and that's what we're here for. That's why we do what we do, because we want to make sure that we can get you to the win. The process may seem like it's daunting when you don't have the information, but when you're working with a broker who knows step by step where things go, we can put you in the right path to getting that home ownership.
We do these things, we do real estate deals all day, every day, 7 days a week. This is not daunting to us. Like, not, you know, we have the intestinal fortitude. So again, please work with a professional that's going to be able to guide you.
Yeah. This is some of the key terms that we used, some that we didn't, but again, it's going to be a part of the information. But
yeah, I think we'll email these key terms and the buyer's guide to everyone that registered via the Eventbrite event. So again, don't stress it. You'll get this in your emails.
So we just want to say thank you. We're definitely going to have questions, a Q&A, but we want to say thank you for, you know, coming on, and we want to give special thanks to Jodie, who is the head of diversity at Compass. We want to thank you to all of the people who helped put this together. So Compass Communication, marketing, the design team.
Hey, Dobbs, especially Compass Comms.
Yeah. Agents of Color, Black at Compass, all of the employees.
Black at Compass. Yeah. It's definitely a team effort. And I'm so glad that Compass has Jodie in their ranks, because she's the real deal. And if it weren't for her, this not would have happened. So thank you, Jodie.
I will Venmo you later. Thanks for the All right, we have quite a few questions, so if we can get started. Jodie is a queen. So many of my friends are in here. Yeah, I'm gonna Venmo each and every one of you. Okay, so I will go through these really quickly. There's actually a ton of really great questions in here, so if folks want to stay on, that would be super helpful. Do you suggest speaking with a banker first or a buyer's agent who can walk you through the process prior to viewing properties?
I personally would say either works, but my preference is for the agent, because again, the agent probably has the relationships, and the relationships can make all the difference in your deal. I have relationships with bankers at different banks. I know how they all work. I know typically what products they provide. If your timeline is super fast, I'm not going to send you to that, because she's going to take 2 weeks to get a pre-approval, and you don't want that. But my buddy Mark at Freedom, where's Mark now? Mark is at Freedom. He can get pre-approval in like 24 hours. So either works, but please, I recommend starting with the agent.
Yeah, I concur. I think that we have those relationships, but if you want to go through your own bank, it's just easier that we can guide you to someone who can get it done, because we have those relationships. If you want to go to a banker at Chase, Bank of America, Citi, I know Janine, I know Tom, I know multiple people in these banks that I can refer you to that I've personally worked with before, that I know will have your best interest at heart.
All right. How about if you live in New York City but want to purchase property in New Jersey? What's the best best method of going about that?
I'm gonna make you call my friend Rachel, who was born and raised in the Bronx, and now she's a badass real estate broker across the bridge in New Jersey. She has an incredible book of business. She has all of the relationships, and she can help you make the right purchase in those cities in Jersey that are considered commutable. She works on the Gold Coast, I think is what they call it in Jersey. Simon, what about you?
Yeah, I have someone, Casey Coker, who I've referred clients to, that she's a rock star. And I know that if I can get you, if you need someone that's going to be buying in Jersey, I will find the person for you. But I know Casey is just a rock star.
Yeah.
Another agent of color member who's a great referral source. So you let us know, and we'll definitely direct you to the right person, depending on where you're at.
Awesome. As most condos and co-ops have a high maintenance HOA fee, does it still make sense to rent over buying?
That's not always true. Again, if you look at neighborhoods like Harlem, where condominium developers received major tax incentives to build in those neighborhoods, not only will you find that the maintenance fees are typically lower than their cooperative or condominium counterparts in other neighborhoods, the monthly taxes could be ridiculously low because you can get or find an apartment that has a tax abatement. These tax abatements last anywhere from 10 to 15 to 30 years, and they can bring your monthly tax bill. I've seen as low as $2.
I've seen $1. I beat you. I've seen $1.
$1?
I've seen $1, and it doesn't raise for another 10 years.
Yeah. So yeah, condominiums make sense. Again, you want to know where to buy and ask yourself if you're buying as an investor or an end user.
I think a big premise of the question that Jodie asked is you have to look at the situation that you're in. If you run the numbers and you see that you're paying more to own than to rent, can you broaden your search? Are you stuck in being this one specific location, or can you move to some places out that you can gain that advantage? Again, you can find where the best locations are. We can guide you to what those neighborhoods look like. And then you have to just do the numbers. You always have to make it look like, do the numbers make sense? And go from there.
Talk to your banker, talk to your accountant, talk to your broker.
All right, there's so many questions, which is wonderful. So I also think there's an opportunity, maybe I can share the questions with you both, and then we can maybe compile something at the end, but I'll ask a few more. Let's see, down payment is 20% minimum for first-time buyers. Is that an accurate statement?
No, I think we said earlier that it's not necessarily. That's the standard if you're buying in certain neighborhoods in Manhattan, where again, simply because it's so competitive, many condominiums and co-ops will have that requirement. But again, you can find properties that accept less than 20%, and you can find mortgage products that you can get approved for no money down. So it's not, what's the word I'm looking for? Simon, help me, what's the word I'm looking for?
It's not a requirement, it's not a mandatory, it's a nice to have. Like if a seller can get 20% down payment, if something goes wrong, they keep that 20%, they'll do it. Some places that's what you have to put down. But as we said before, there are programs and loans that you don't have to have that. And if you find the right neighborhood that accepts that and the property that accepts that, then you may not be putting 20% down. Maybe you're only putting 3.5% down for the FHA. It just depends on where you're looking.
Or none with a knock-on mortgage.
Or none, like Jason's $840,000.
Blew my mind.
What's the best way to find lists of HDFCs and to find someone who knows HDFCs well? And an additional question to that, this is something else. Best way to get in touch with brokers?
Call me.
Put you on Clubhouse?
Huh?
Add you on Clubhouse?
I mean, I will say this, you have to know which neighborhoods have it. Because there are specific neighborhoods that have it. Harlem has it, Brooklyn has it, the Bronx have it. There are some, like they used to have a button on compass.com that you can literally search HDFC, but I don't think it's the same because a lot of places aren't putting it up anymore. So you just have to know the buildings and know the neighborhoods.
They're all over the city. I mean, I've seen them in the Lower East Side as well. They're all over the city. You can do keyword searches. There are some, I'm not going to name the evil search engine that we love to hate, but I think Compass does an extraordinary job of identifying HDFC co-ops in the city And again, knowing the right agent. Simon actually does a ton of HDFC co-ops. So if that's something that you're thinking of, I highly recommend you work with him.
Okay. I'll do the last two. Is there a way to structure your offer to appear as an all cash offer without it actually being one?
Yes. There are ways you can structure it for how it's going to look in terms of the offer. We'll say that there are, how do I say this? You can put an offer in where it's non-contingent on a mortgage, where regardless of if you qualify for a mortgage or not, you're going to have to close on the place. So let's say you're buying a place that's $500,000, $500,000. You're going to put 20% down, so you're putting 100,000, but you put a no contingent offer. If you try to get a mortgage on it, if you're not approved for that mortgage, you still have to pay the other 400,000. So the seller can interpret it as, oh, this is a all cash deal, and you can phrase it as that because there's no contingency that says that you won't close whether or not you get a mortgage. There are some language in the contract that says you cannot get a mortgage. At that point, you have to figure it out.
I would just say don't play games because in New York City, the sellers are pretty sophisticated. Their lawyers are pretty sophisticated. Their agents are pretty sophisticated. And I'm not sure what the intention is behind the question, but it's either an all cash deal and you have proof of funds, in my opinion, or you don't. A lot of times, I know actually every time I'm representing the seller, if you're telling me or signaling to me in any way that it's going to be non-contingent upon financing, which makes me think you have the cash somewhere, trust and believe, I'm gonna ask you for proof of funds. I wanna see the money. And if you can't provide that, guess where your offer is going? It'll get to the seller because I'm legally required to send it to the seller, but it's gonna be at the middle or the bottom of the pile.
Show me the money. Jeremy Byer.
All right. Can I get pre-approved by multiple lending institutions without it affecting my credit score?
So as someone who's come from banking before, I will say this. It will affect your credit one way or the other because it's going to be a hard pull. If you get multiple pre-approvals from different banks within 30 days, it counts as one pull on your next credit report. You want to be leery of just having your credit pull 6, 7, 8 times because you really want to zone in on the bank that you want to get or the rate that you're going to get. Depending on the bank, I know the mortgage banker that I use at Chase, Janine, if she gives you a rate and you find a better rate, she will fight her hardest to rate match you. Banks have that ability to match rates. They just can't keep matching rate over rate over rate. They can do they can get you one rate that you requested. They'll try to fight for it, but then you're like, oh, but I also went to this bank and I pulled my credit there and they told me they're going to give me this rate. You're pulling your credit necessarily, just trying to find the best rate. Just find one bank that you want to bank with, maybe 2. You have 30 days to have your credit pulled. It only shows as one pull after the 30 days. So you may freak out when you see 6 pulls in 30 days and then it reconciles to be one, but you want to make sure you zero in on the bank that you want to work with.
All right. Final question. How much money should you set aside for closing, percentage-wise compared to the price of the property?
Yeah, it differs. There are different closing costs for different property types. Again, some co-ops will have stricter requirements for that. Well, not only the post-purchase liquidity. So co-ops, the closing costs are going to be different. Condominiums are going to be different, and townhouses are going to be different. Compass has a really great closing cost sheet. So one sheet that breaks down the closing costs for each property type, and it'll give you an estimate of what to expect. Everything from how much it's going to cost for the title search to your attorney, all that stuff. So we can send that to you guys via the email as well.
The one person that's going to have the itemized breakdown of what your closing cost is going to be is going to be your attorney. They're going to send it to you before closing. Like, this is all the cost is going to be. One of the questions you can also ask your attorney, like roughly what it could be. But again, they can only give you estimates until you find a place. And that's going to determine your closing costs, whether it's a condo or a co-op, whether you're above this price, or whether you're paying the mansion tax above $1 million, or if you're under $1 million, or if you're going to be paying the transfer tax, or if the seller's going to pay the transfer tax. There's a lot of things that can vary. We're not attorneys. The attorney will give you a itemized, detailed closing cost of what everything is, and it will tell you what it is. The closing cost sheet gives you an estimate, but you want to take that as an estimate.
Yeah, exactly. Well, we'll give you the estimates.
Amazing. All right, so that was the final question. I know we have all of the attendees' emails, so if you can send all of this information, and then I'll also share all the questions that we didn't ask, and you all can kindly type responses to it. But that's it. Thank you so much, Jason and Simon, for doing this work. I truly appreciate you. Yeah, y'all can close it out.
Thank you, Jodie. We're all super fans. Simon, thank you for your help. I'm pretty clueless when it comes to tech and organization. And if it weren't for Simon, this would have been a lot sloppier. Oh my God, and Patrick, our tech guy from Compass, he takes such good care of us. Patrick, you're amazing, thank you. And to all of the buyers that came today, don't be scared, we got you. Reach out to us and we can have a more intimate conversation one-on-one.
Yeah, thank you for coming. Thank you for participating. We're here if you need us. Reach out to us, and I hope you have an amazing Thursday. It is. It's starting to blur together, but have a great one.
Bye, guys.